we're tracking, maybe like 4 million tokens that will be launched. But if you extrapolate from where we're at now, it's like almost all of those will also fail.
Here to talk to us about the current state of crypto is Sebastien, friend of the channel and also researcher at Aquanow.
Thanks for having me on again. It's always good to chat with you.
Always a pleasure. Let's talk about what's currently happening right now in the markets. As you were putting this report together, you do it every single month. What was your biggest aha moment?
Yeah, there's a report by CoinGecko about the number of like tokens launched and failed this year. And last year was a big year for launching new tokens. As kind of the meme craze kind of kicked in, and but like I guess like for every one launch, maybe half of them failed. And this year we're tracking maybe like 4 million tokens that will be launched. But if you extrapolate from where we're at now, it's like almost all of those will also fail. Um, and I mean, you see the state of crypto Twitter is in kind of a dark place. I think for a lot of folks, and like maybe this is part of that. I don't know. I was pretty surprised to see that almost, and I double checked it. Like I'm like, what? Am I reading that right? Because yeah, pretty wild to see that like almost one to one the amount of new tokens launched this year have also there's been the same amount of failed tokens. Now some of those might have been carried over from last year, but nevertheless, right? Like it's a pretty disturbing trend.
Makes me think that this cycle is completely different from anything that we've seen before, and rightfully so, because now we've got institutions in the mix. And looking at this chart, Sebastien, I can't argue with the Bitcoin maxis of why they want to just stick to Bitcoin and just avoid anything else.
Yeah, no, I agree. If it was going to be something that someone was going to like dollar cost average into on a regular basis, it's like kind of the only one that makes sense, right? Except for maybe some of the equity companies that are out there now, where you could see like a compounding business or something like that. But like around like crypto and crypto's growth. But I mean, otherwise, it's like it's so hard to say. It's like we talk about all these like really nascent projects and some of the cool things that they're doing, but like at the end of the day, like how much does the token value you know how much is that tied to the success of that technology? And you know yeah, so I just I definitely agree with what you're saying, and like this is a pretty good chart to for the Bitcoiners or the or the maxis to champion.
It's definitely the supporting argument there. Having said all that, I mean, there are some great things that are happening in the altcoin market and things outside of Bitcoin. Like we just had the Circle IPO, and the whole stablecoin narrative. That's been doing really well. What have you found in regards to stablecoin for the month of May?
This is from Token Terminal. It was like the fees earned by or by market sector in the digital assets, and like stablecoin issuers brought in $652 million over the course of May, and like that's pretty beast, right? Like that's awesome. And we saw the success of the Circle IPO, and then of course Tether would be like order of magnitude larger than that, and then maybe even more so in terms of profitability is the general consensus there. And so look, it's definitely one of crypto's killer apps. And then Fireblocks had published a report over the week or over the month as well that talked about like like a little poll that they did, and amongst the people that they asked, it was the corporates that they asked, it was like half of them were currently using stable coins in their business, and then the other half, call it like 80% of those were planning to, or like were in kind of planning moments. And so like they're stable coins are already crypto's killer app. There's a good chunk of people who are using them, and a boatload of people who aren't. And so, I think when Circle kind of does what it does, in its first few days of trading, like as a net interest margin business, or something closer to a bank, for it to trade at the multiple it's trading at, is certainly pricing in a lot of this kind of like go forward success, which isn't an opinion of mine as to whether or not that's like likely or not. Like that's kind of we'll see. We'll let time decide that. But like at the end of the day, it's like it certainly is pulling forward some of that vision. But I mean, the market is saying it's like, hey, this is like the way to to get exposure to stablecoin growth today in a stock portfolio, and that scarcity value drives it higher. And I think that that's further evidence of the strength in this narrative. And one of the things that we like to try to do in markets, or certainly in crypto markets, is kind of think, okay, well, what's the next thing to benefit from that? And I mean, it's like pretty obvious, so I don't think I'm reinventing the wheel and saying any of this kind of stuff. But like, I mean, if you go to the next slide, it's like, oh, lo and behold, DeFi is printing, its highest ever, total value locked, at least in terms of, token terminals methodology. If you think that stable coins are going to grow in a massive way, what's the next likelihood or the next likely beneficiary of that? And that's going to be the economic systems that were built around other digital assets, and like where you don't want to have volatility, like through like Ethereum or like a wrapped Bitcoin or something like that. It's like, well, the next best thing to do is with stable coins, and I think that you're seeing that, right? I think there's probably, to the extent that like the Circle IPO shows people willing to take a position such that they think stablecoins are going to grow in a big way, like that's going to happen to DeFi too. It's a lot more of a fragmented ecosystem, so like maybe a little bit more difficult to pick your bets as to what's gonna win. And again, there's always that problem of like, does the success of the protocol actually flow to the token? But nevertheless, I definitely think you'll see a lot of DeFi activity flowing. As I also think that you'll see a lot of stablecoin growth as well. Some of the stalwarts that we've seen, dominate is like, Uniswap crossed $3 trillion in total transfer volume in the month of May. Like, that's not an insignificant number of swap, and like it's pretty crazy, right? Like this is code that processes all of this, and so it's really like speaks to the capabilities and institutional possibly capabilities or widespread capabilities of this technology. Maybe not like institutional per se, but like you could have a lot of swap capability spread around the world where a lot of people don't have access, which is part of the stablecoin thesis. And then keep going. It's like hyperliquid along a similar vein, kind of a DeFi 2.0, 3.0, however you want to characterize it, but nevertheless an extension of technology. Some of that is maybe it's using like crypto rails, but a lot of the stuff gets done off chain. Okay, like we can debate that or not, but at the end of the day, great user experience, has had a heck of a launch, and it showed a little bit of chinks in its armor, with some socialized losses of the HLP side, but bounced back in a humongous way, and really doesn't seem to be showing any signs of abatement there. And another stalwart, of course, is in the lending market. Aave, now over 30% of total DeFi TVL. Stani there has mentioned that they're in discussions with fintech operators. They keep rolling out new innovations on a regular basis. They're starting to turn on the fee switch and all that kind of stuff. So it's the winners are winning and really kind of proving out what some of the capabilities are. It is kind of interesting, actually, like as a quick side note, that I do really find that like financial services tend toward oligopoly, and we're maybe seeing that a little bit in DeFi as well. Hard to say, but nevertheless, and maybe just a quick little aside. Like I saw this tweet. I think Token Terminal put it out, but it's like obviously at like 40 billion in TVL, which if you compare that to like Coinbase and Robinhood, each in the hundreds of millions, it's hundreds of billions, sorry. It's quite small, but like, so there's a lot of runway potentially for it as well if DeFi is allowed to proliferate. And then, Base, of course, like a natural extension of Coinbase, has really seen a lot of activity pick up on the user side. Interestingly, though, something I've been watching is like the contract deployers or like maybe like core devs, or how you want to call it, like is not showing a super positive trend. So maybe something to keep an eye on. In the case of privacy, you're seeing problems with. Like obviously some notable headlines around people who get tortured or who have physical threat to their livelihood as a result of their crypto wealth. That's probably only a problem that gets worse over time. So many are working on that. Like, I'll shout out one of our portfolio companies, Hincal. They're working on a private wallet, in addition to some other privacy suite technologies. But really, after Tornado Cash had its ruling reversed, and maybe privacy was something that was, or the whole code is law thing kind of came back. It was pretty interesting to see Monero have its market cap almost double, just in the last few weeks here. So, there's a lot of reasons for people to want to keep some of their online transactions private or confidential. And then flipping to some kind of smaller projects that I think had some interesting trends over the month, like Injective's market cap kind of saw a little jump off of from a straight downward trajectory, which is interesting because its transactions were going upwards, so people are using the chain more. Fees picked up with the token price, so we'll see what ends up going there. It's not an ecosystem that I super follow closely, but
Sebastien, I wonder if this has anything to do with the tokenization of stocks like Nvidia. Perhaps maybe caught some interest from the users and they started using the chain more.
Like, I know Injective had a number of cool projects, and a lot of DeFi guys liked it. So that's really awesome flag, Mikhail. Thank you. Some of the ones that, like, again, like, I'm not super familiar with, but like I went to have a look at were like Axiom, which is like it's a Solana based project that allows like cross-chain interactions. So I think you can use like Hyperliquid and maybe Base, but really interesting to see like them and Flare, both like some interoperability kind of like focused projects. Just see like really like positive trends. And in the case of Flare, they had a huge amount of like USDTO minted on the chain, and so obviously their TVL jumped up on that. But these are just like projects that I flagged for like interesting trends, and then ones that kind of like put on people's radar a little bit. I mean, the space is so big, you can't keep an eye on all things. And then one here, I've talked about Say in the past, and it's like you've got like market cap, down and to the right, TVL up and to the right. They've got a kind of a similar problem that a lot of other projects have with respect to like unlocks. So people are a little bit scared of maybe getting in front of that, or there's like a wave of selling kind of thing like that. But it's kind of an interesting thing, right? Like, people are obviously using it, and there's like some positive fundamentals, but it's not enough to spark an increase in the token price per se.
Could any of this, Sebastien, be more of like a artificial suppression just in order to accumulate more, given the success that it's having from like a user perspective?
Well, like, I was looking at its unlocks, and they have quite a heavy cliff kind of ahead of them, like ahead of it, like for the next couple years. So I don't know if it's like if there's people trying to like suppress it per se. It's just there's just a lot of tokens coming out, and so I do ultimately think that if Say was to like continue to see like its TVL just like um, continue to pump higher, users using it all the time, then eventually that would just like create like enough demand for the token for like needing to use the chain and so on and so forth, that like that problem goes away. But in the short term, it's like its speculative value probably gets weighed, and not just Say, like, this is across the ecosystem. So it's a problem that we have to deal with altogether, and it's been everyone's been made acutely aware of that in the last year, I guess, probably if you go back. And I don't know that that's going to get a lot better in the short term, because if we go to like venture value of like new deals and stuff like that, like a lot, like obviously like M&A is has kind of stepped up as a big source of financing, and like now we've got IPOs on the Circle side of things or whatever else, which is all super positive, for people who are building in the space, and investors. But 3 months in a row of really healthy mid-single digit billion capital flows is positive. But for people who are worried about token cliffs and that kind of stuff like that, maybe it doesn't help a ton. But nevertheless, I think the idea that we're seeing really healthy capital markets, or capital flows into the space is a good thing. And as we look at deal dynamics, Obviously there was like some huge big name projects like WorldCoin, Deribit, Strive, like that are kind of most topical. But um, again, I forget how many months in a row it's been now, like maybe 6 months in a row of DeFi having the most funding rounds in the last 30 days. Like again, like this is it's definitely not financial advice. It's hard to like even kind of pick and choose what's going to be a winner or whatever else. But like if there was like a DeFi ETF or something like that, like I really would think that like this would be something that would be really really interesting to track over time because like the natural kind of like second derivative of like, oh, stable coins are crushing it, what happens next, and like it's going to flow into that. And if these were like equity businesses who were seeing like revenues and profits and all that kind of stuff like that, then it would probably be really interesting. It's just for reasons that have been discussed at length and continue to get flagged, it's like token doesn't equal doesn't always benefit directly from the success of a project. Maybe you can put in like the show notes if there's such a thing, but like there was a presentation by a guy named Felipe Montelegre, probably screwed that up, by Thelia Research. It's called Tokens Are Broken. This synthesizes so much of what I was thinking in such a powerful kind of delivery. And I think it's like 30 minutes long or something like that, but the guy just like knocks it out of the park in terms of like a lot of the issues. And yeah.
Sebastien, one thing I notice about your chart here is no sign of AI.
It's kind of across the space here, so you'd probably have like that probably like show up in a lot of different ones. It's actually an interesting kind of exercise. I can maybe try to go through and manually flag that specific vertical within like infra. DFAI is the thing, and then tools and services. It probably shows up too. So it's a good observation.
All around, very interesting. I did want to ask you, going back to some of your charts. Like for somebody that is newer to the industry, why is it so important that the TVL is going up and to the right and we're getting a lot more stablecoin volume? Like what is the biggest positive of that you see?
Oh, well, it's like it's a heuristic too, right? There's you could someone could Google like TVL is broken or TVL bad metric or something like that, and they'd probably find like a healthy dose of literature that would be like supporting that. Like it's just a short kind of like way of looking at like, oh, there's more capital that's like committed to a certain project or ecosystem or something like that, which that indicates like interest, people wanting to be there, putting their locking their funds there for a while, or at least like moving capital there is a positive. And then in theory that's capital that will provide fees for the underlying application or blockchain or whatever it might be. So it's a very like short form exercise to say like, okay, like TVL is up, then like you would expect fees and activity level or like interest to be alongside there. It's not always perfect though, right? Because if you're paying fees in a governance token, and that governance token gets cut by 90%, even though activity is going up, then you're not really seeing the same kind of like reflexivity in terms of like fee generation, which is what you see in that injective chart there, right? Where like the token price has gone down and so as such its fee generation has gone down, even though its TVL has gone up. So it's not perfect, but it's just something that it's. If like you step back and say TVL and all of DeFi has gone up more broadly, then it's like maybe not a direct like it's not like a perfect one-to-one for like, oh, this is generating fees, but it's like people are like the amount of capital in the space has gone up. It's like one of many metrics that you'd have to look at, but like anything else, these charts are kind of like meant to like spur on conversations like this, and then have people ask additional questions and double click and that kind of thing. But yeah, kind of a short form exercise in terms of like generate like quick finger in the air, like, oh, interest, has gone up. The economy on that in that particular instance is probably doing okay.
These are really good ways of just kind of looking under the hood, right? Your slides that you bring to the channel really do a good job of showing us the direction that we're headed in. A lot of times, what happened, in the previous month is a really good estimate of what we can expect moving forward. Of course, not always the case, as we've seen with AI. It just kind of fell off the cliff, and we're seeing also it blend in and kind of infused into the infrastructure, the DeFi. So it's kind of becoming more of the norm too. So it's really interesting to see these observations. For those that are watching, if you found this video helpful, please subscribe to the channel, like the video, give us a comment. What did you like about it? And also be sure to subscribe to the newsletter. I'll include all of the links, and also give Sebastien a follow on X. He provides some really interesting information there.
Well, Mikhail, just on that like AI kind of point or whatever else, like it's interesting, right? Like Virtuals and Aliza both, went back and retooled a little bit and kind of like changed how like they became kind of like launch pads, and then kind of worked their token into the ecosystems. They had this kind of neat like initial kind of idea of like, hey, we have this like open source like agent kind of technology, and then it was like, oh wow, this is crazy, and like both of their tokens went like insane, and then they crashed, just as crazily. And then since then, those teams have kind of like gone back around, retooled for like what might be like a second run or who knows or whatever else. I think both tokens have are up markedly up off their lows, but it's like they started to like incorporate some of those more fundamental drivers into like that would derive direct benefits to the token, or demand to the token. And so I think that's like something you're seeing more and more of. And I mean, maybe that goes away if there's an IPO market and these things can just go straight to straight to the stock market or whatever else. I don't know, but like I do think it's interesting like how fast things happen, and then like these are smart people who like launch these projects, and so they're they're financially incentivized to have the token price go higher, and maybe there's other incentives there too or whatever else, like in terms of like drive or like personal pride or whatever it is. But like they didn't just sit back and be like, oh, okay, well that didn't work, on to the next. Like these guys like really went back around and then like doubled down on their ecosystems. And like again, not a comment on whether or not that was like the best or the whatever else, but it was pretty interesting to see these high flying projects kind of go back and retool to kind of drive value to their token from the technology that they created, and like that's supposed to be linked to it. So pretty neat.
Yeah, they're still in the exploratory phase, and they took what worked and applied it, and what didn't work, probably threw it out the window, and we'll see what happens next. Thanks so much, Sebastien.
Cheers, man.